I said this is going to be the beginning of a bear market because once you have futures, you can do what's called spoofing. You can short naked this asset that you don't own. Why Bitcoin was classified a commodity, not a security.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Mark Yukso reveals Bitcoin's $1 million network, fueling unstoppable growth and immense opportunities. We'll explore his winning strategies and incredible real-world triumphs. Let's dive in and uncover these life-changing insights.
I will argue that you got two things going on. One, you got this natural arbitrage that's going on between people who are long the ETF, the financialized version of Bitcoin, and short the future. And that caps the price movement. Second thing that's going on is I do believe, and I don't know if it's Buffett, I don't think it's Buffett, but somebody has changed their mind. In my opinion, somebody, and whether that's nation states or whether that's other billionaires, somebody has changed their mind and they want to accumulate. And they don't want to accumulate at high prices, they want to accumulate at low prices. So what do? You unleash the bots on all the leveraged speculators. See, here's the problem. So here's my outlook for the year. So Bitcoin's fair value, as you said earlier, is around 95K, maybe 98, somewhere in the high 90s. What's that based on? That's based on Metcalfe's law, which is just a theoretical equation that takes all the inputs, the number of nodes, the number of transactions, et cetera, and comes up with a mathematical formula for the value of the network. And networks are valuable, right? 5 largest companies in the world aren't really companies, they're networks. Like what is Amazon? They don't make stuff. They are just a network of buyers and sellers, and they take a cut. And their margins are really high. But the reality is that the Bitcoin network is very, very valuable. The Bitcoin network, the network itself, the secured network that's never had a fraudulent transaction. How many times do you have to get a new Visa number because your number gets hacked? Often. Bitcoin's never been hacked, not once. Ethereum hacked, Bitcoin never been hacked. And it's had like 20 minutes of downtime in 16 years, so it's pretty reliable. Well, why? It's the most powerful computing network the world has ever seen. It's 1,500 times, not 1,500%, 1,500 times more powerful than CERN supercomputer. So this is a really valuable asset, just as a computing asset. Well, then the number of nodes keeps growing, the hash rate keeps growing, all the fundamentals keep growing. So we can calculate this fair value. When the price is below fair value, who buys it? People like you and me and all the other people we traffic with, investors. We like to buy stuff on sale. We like to buy things below their fair value. That's what we do. Okay? And what does that do? That slowly pushes the price toward fair value. Now, as the price starts to move, who gets involved? Traders. Traders don't really care about fair value. They just want movement. They want to scalp a little here, there, up, down. They don't really care. They just want movement. Then who comes in? As we start to get towards fair value, and maybe we can get a little bit above fair value, well, then the speculators come in. Well, who's a speculator? Speculator is the opposite side of a hedger. So if the price is fair value, and I'm a miner, okay, and I can produce it below fair value, then I will sell my production and I'll sell it forward in the futures market, and the speculator will come in and take the other side. Okay? That's just a natural phenomenon. It's like an oil producer or a gold producer. You sell forward production to lock in your profits to pay your bills, and somebody speculates. But then the problem is, as the price starts to move, it starts to generate attention, and there's this self-fulfilling price. And then the gamblers come in. And the gamblers do a couple things. They don't give a shit. They don't care about value. They don't even know maybe what they're buying. They just see movement, and they want in, and they use leverage.
Bitcoin is encountering headwinds, reclaiming $94,000 after slipping below that mark on March 2 and failing to bounce back. Bitfinex analysts warn that any push above $94,000 may face significant resistance, partly due to volatility from President Donald Trump's March 1 crypto reserve pledge. The move propelled Bitcoin from $85,000 to $95,000, but intense selling soon wiped out most gains. Some traders highlight ongoing uncertainty, noting that Bitcoin's spot market remains active with heavy sell pressure. Rect Capital contends a bottom may be forming, yet warns of further downside if buyers fail to sustain higher levels. Despite minor rebounds, Bitcoin briefly tested $81,000, showing fragile sentiment that dominates short-term action. Analysts are monitoring upcoming macro data, with the United States Consumer Price Index set for March 12 and a Federal Reserve rate decision on March 19. Michael Van de Poppe expects turbulence until these events pass. Axel Adler sees recovery if genuine buyers re-enter at lower prices. The Crypto Fear and Greed Index currently reads 20, deep in extreme fear, reinforcing caution until volatility subsides. Market observers remain divided over whether Bitcoin will stage a comeback or drift lower. Some see this period as consolidation, while others anticipate downward moves.
And so what happens, we have this 4-year cycle. What's the 4-year cycle? Some of the most brilliant programming really ever, in the sense that every 4 years, the block rewards, the number of Bitcoin that are given to the miners to secure the network, which is a genius idea, it gets cut in half. Well, why is that a good idea? Well, think about it. All your miners have fixed costs. Electricity is fixed, the machines are fixed. So if you decrease the number of rewards in half, in theory, half of them should go out of business. But they don't. Why not? Because they're like, well, then I just won't sell. And I'll force the bid up in order for me to sell. So after the halving event, we see this basic doubling of fair value, okay? This doubling of price. Well, that increase attracts the speculators. So the halving event happens when we're below fair value because of the fourth cycle. So that first part of the cycle is that recovery from winter, and it starts to move toward fair value. Then we get into what's called crypto summer, which we're starting to get close to fair value, and the halving event occurs. That was a year ago. Then we get crypto fall. Well, what's crypto fall? That's where the price starts to move above fair value, and the gamblers come in. And the further it gets is based on leverage. In the previous 3 cycles, we got to just about 2 to 2.1 times fair value. So the first one, fair value was 10. I'm sorry, the first one, fair value was about 3,000. We got to like 6. Second, it was fair value was 10. We got to 20. The third was 32. We got to 69. So we get to these levels of extremes. Well, then gravity works, and somebody comes in, squeezes the people who are over-levered, and the price starts to correct. Now, there are those who would argue that that's happening right now. The cycle's over, and we're headed down. No, because we're too close to fair value. My guess, and I said this back in January, was the 4-year cycle extends sometime into Q3. Is it October? Is it September? I don't really know exactly, but that's based on long-term history. So in theory, based on previous cycles, we should get somewhere between 1 to 2 times fair value. If fair value will round it to 100. I think there's going to be less leverage. We don't have FTX anymore. We don't have Bitfinex. There's not as much leverage in the system. There's still leverage. Obviously, we've seen that last couple of days. But my estimate was we'd go to 150. If you just look at the pure cycles, it says 170. Some would say we're going to get to 200. I know Max is saying 220 and others. I'm taking 150. Maybe it's 170, but somewhere to.
Bitcoin's latest retracement is drawing attention from analysts who note that the flagship cryptocurrency may continue to consolidate before making a decisive move. According to CryptoQuant contributor XBT Manager, short-term holders are currently selling, while long-term holders have not yet begun accumulating again. Until that dynamic shifts, they argue, it may be unwise for traders to take on excessive risk or jump into long positions too quickly. The sentiment arises after Bitcoin dropped from its all-time high of $109,000, reached on January 20, days before former President Donald Trump's inauguration. As prices peaked, short-term holders started increasing their supply, while veteran investors steadily offloaded some of their holdings. Over the following month, approximately 100,000 BTC left long-term wallets. Trends in December hinted at a similar pattern, with long-term holder supply declining from 15.2 million BTC on December 1 to 14.7 million by December 20. As of now, that figure has fallen further to 14.4 million, reflecting consistent selling pressure from seasoned investors. These changes coincided with Bitcoin dipping below $100,000 on February 4 amid growing concerns of a looming trade war, followed by a sharper plunge beneath $85,000 in late February. That sell-off deepened when Bitcoin slipped under the pivotal $80,000 mark, nearly erasing gains made since Trump's election victory on November 5. At present, Bitcoin sits around $87,100, prompting ongoing debate about its next move. While some remain optimistic, analysts continue to warn against complacency in this unfolding pullback phase. Many observers watch macroeconomic signals, anticipating momentum or a downturn. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.